Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. Welcome back to the show, Victor.
Thanks, Jim. Good to be back with you.
Victor, you've been trading financial markets for more than 45 years. Before we get your thoughts on specific markets, can you tell us how you trade these days? Your methods, your time horizons, how much leverage you use, that sort of thing.
Well, Jim, I've got two different ways that I participate in the market. One I call my long-term savings, okay, and that's things like, buying my house for cash, not using any leverage. 10 years or so ago when the Canadian dollar traded up to 110, I guess, against the U.S. dollar, I realized that I had everything I owned in Canadian dollars. So I started to do a little long-term diversification, putting some of my money into some of my assets into U.S. dollars. So that's what I call my longer-term investments. That stuff just like stays there. Most of what we're going to talk about today takes place in the short-term trading view of things. And in my short-term trading accounts, and I have a number of them for myself and my wife and my corporation and so on, my core position is cash. I've got money in there so that I can take a position and put up the margin anytime I want, but I'm going to revert back to cash. So that's not like I have a portfolio where I'm fully invested, I own some of this and some of that. My core position is cash, and I use that cash to margin a trade when I get a brainwave about doing something. So I'm going to take what I'd call a short-term view on a market. A short-term view, time-wise, means, a few days to maybe a few months. And I trade exclusively in those accounts in the exchange-traded futures and options. It's just what I've done for years. I think trading is opportunistic. In other words, it's not like a coupon where I'm going to get a regular income from the trading that I do. Sometimes I'm going to make money on a trade. Sometimes I'm going to lose. Sometimes I'm going to go for a month or two and not make any money, and then maybe all of a sudden, things work out really well, and I can't do anything wrong for a couple of months. So it has to be seen as opportunistic. You make money when the opportunity is there, not when you want to. I develop what I'd call a macro view on the market. So I read tons of research. I subscribe to a lot of things. A lot of people that I know in the business send me their stuff. I send them my ideas. I look at literally hundreds and hundreds of different charts. I study particularly inter-market relationships. In other words, let's say what the stock market is doing relative to what the bond market is doing. I'm really keen on what I call market psychology. Like, if everybody and his dog seems bullish, then I'm inclined to want to be bearish. I think my approach would be, it's an art, not a science. I'm more of a poet than I am an engineer. And as I've said for years and years, if people want to trade, make money trading, they have to find a way that suits them. You can't wear somebody else's boots. So that's what suits me. I try to find a spot to enter a market where I think the risk reward looks good. But to me, trading is really all about managing risks. I get a brainwave that, let's say I think the Canadian dollar is going down. Okay, great. But where I'm going to end up making money is how I manage the risks. In other words, what sort of my position size is, where I'll take the trade off if I'm wrong, make sure I'm not concentrated where, let's say, all I've got on is short crude oil and short Canada. In some ways, those are the same trades. I'd call that concentration. And I think one of the most important things is just being willing to admit that I'm wrong. I lose money on lots of trades. And, I just say, this isn't working. Let's get out of it. Save, no point throwing money down a rat hole, and clear my mind and try to get to work on something that is working. And, the last thing, I guess, is trying to manage, and I mean trying to manage my own emotional swings. I mean, when the markets, everything I've got on is going my way, sure, I feel good. When I can't seem to get anything right, I think, God, I'm never going to make any money again. So it's definitely a game of, it's not perfect. You find a style that suits you, and, that style changes over time. But anyway, that's sort of a look at how I go about trading.
We'll have more with Victor Adair right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're speaking with Victor Adair. Victor, you talk about forming a macro view of markets, and then you develop specific trading ideas as a derivative or subset of your macro views. So what are your current macro views?
Let's see. To keep it really simple, I'm sympathetic to the view of it's the everything bubble. We've had massive central bank money printing over the last couple of years. We've got interest rates that are historically extremely low. They're negative in some places. Volatility is really low. And one of the reasons for that, I think, is that there's just the whole idea of selling volatility, in other words, going out and writing options or different things, has become really popular. I think, we had here a couple of weeks ago, there was a painting. It was a Leonardo da Vinci painting that sold for $450 million. And my son said to me, wow, is that ever an example of people don't want to be in cash? And I thought, yeah, that's perfect. There's a trendy new expression called FOMO, F-O-M-O, the fear of missing out. And I think that's kind of a way of describing how people are getting into markets these days. I mean, certainly at the end of the crash we had in, call it 08, with more of a leg down in 09, and then we started to turn higher. I know following that for a couple of years, some of the really smart people I knew were still heavily in cash. They just maybe been scared so much by what had happened then that they were in cash. But I think it seems like now, whether it's exotic cars that are getting bid up for huge prices or, high-end real estate that's going for huge prices, there just seems to be this like everybody's in, that's the sense. Breadth is really narrow. I think there is 7 stocks out of the 30 stocks in the Dow Jones that account for over 70% of the growth in that index just so far this year. Of course, everybody knows about the concentration, what we call the FANGs, that kind of thing. So in a way, my macro view is, from a market psychology point of view, this market is potentially cruising for bruising. So, one of the things that I like to look for is to find markets that are maybe setting up to either turn or to have a breakout, and then I have to sort of control myself and wait, that I get a confirmation that that's actually happening before I put a trade on. So I think that's kind of my global macro view, and I'd say looking ahead, if there would be one call that I would have for what was likely to happen next year, is that volatility is going to go way up.
Well, if you recall the last crash, 2008, people had put their money into cars, art, and real estate, and a lot of them saw the value of those assets plummet along with the stock market. So just because you buy something solid doesn't mean it's going to maintain its value, does it?
Well, Absolutely, and I mean, how solid is a $450 million oil painting? I guess here's a key word. I guess would be fragile. You know, there is this fragility in the market that kind of goes with this complacency. Some of the really smart guys that I read talk about how much liquidity is going to be there if, you know, we actually do have a sell-off in the stock market, and a lot of people are calling the broker saying, get me out. You know, I don't know. My view is, whether I'm right or wrong, you know, there's speculative froth in the market. You look at what's selling in Canada these days, marijuana stocks on cryptocurrencies. When I'm at the golf club and the guys come up to me and say blah, blah, blah about the market, what do they want to talk about? They want to talk about Bitcoin or marijuana stocks. So, you know, it could go on for years, but that's just kind of how I feel, that the market's a little vulnerable here to at least a correction.
We'll have more with Victor Adair right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Victor Adair. Victor, given the way that you like to set up your trades, let's take a look at some specific markets. The Canadian stock market and the U.S. stock markets. Anything hot there?
I think the markets look toppy. I look at a lot of intermarket relationships. I see, for instance, Shanghai stock market is at a 4-month low. The Euro Stock Index, which is sort of the European equivalent of the Dow Jones Industrial Average, is down 5% from the all-time highs it made a month ago. Emerging markets are off of their highs. We could continue on to new highs in the stock market. I'm just saying it looks frothy to me right here, right now. A huge percentage of investors are bullish. In some senses, as we're just talking about, nobody wants to be in cash. I mean, there's nowhere else to go. You know, there's lots of leverage out there. But it's interesting to me just the way the markets have behaved here in the last week or so. By the markets, I mean the U.S. market first, and Canada kind of tags along. Looks a little toppy right here, right now. I have been taking some very short-term positions, looking for this toppiness I'm looking for the market to break.
Interest rates. Do you think the Fed will go ahead with its plan to hike rates this month?
Yeah, absolutely. The Fed's going to raise interest rates this month. The really interesting thing is, you know, what are they going to do next year? Right now, we've got the U.S. 2-year is trading at 9-year highs. That's the 2-year interest rate. The yield on it is at a 9-year high. The yield curve has been flattening like crazy. Real rates are pressing higher. And with a new Fed, by the way, you know, the Fed's going to be a different group of people as we go into next year. So, but I think that the market would be underpricing the risk of the Fed raising rates more than the market thinks they're going to do right now. That's kind of the thing I'm looking at, and I really pay attention to rates, particularly because I like to trade currencies a lot, and generally the relative interest rates between countries has a lot to do with what the currencies are doing relative to one another.
And when it comes to currencies, Canada had a nice bounce to the loonie when they boosted interest rates here, but the Bank of Canada just announced it doesn't have any plans to hike rates in the near future. What's that going to do to the Canadian dollar?
Well, here's the thing. I've made some pretty good money the past few years being short Canada, so I know, therefore I've got a bias, and I'll look at it that way. I was short Canada last week, and the market traded off about a cent until Friday morning when we got that way stronger than expected employment number, and Canada raced higher. And here's the risk management side. I had a stop in above the market, got taken out of it like in moments after the unemployment number came out, and was glad I was out as the Canada raced higher. Early this week, I guess was actually Monday, I started poking Canada at the short side. I think the number was I think the Canada rallying up to 79 cents was just going way too far too fast. I'm bearish of Canada. A number of reasons. We could spend a half an hour talking about that, but we've got NAFTA, that we're cutting taxes in the United States, raising taxes in Canada. The interest rate spreads are favoring the U.S. dollar. And one of the things I certainly look at is the positioning risk. Speculators are very long of the Canadian dollar still. So I think kind of the key number on Canada, if we take out the lows of October and November, which are down around, I'll call it 77.5 cents, I think we could slide off a few cents from there.
Is crude oil going to continue to trade in this range, or will it actually hit $62?
Here again, I've made a lot of money. I should be, I'm a Canadian, right? We're polite. I've made some pretty good money being short crude oil over the past couple of years. So I'm maybe inclined to look at it. I think crude right here, like the early part of December, we're at another one of those as good as it gets moments. It's just like last year. We had the OPEC meeting around the end of November, and then partway through December, the OPEC allies, as I call them, including Russia and that, said, yeah, us too, we're all going to cut our production. And that was at $55, and that was as good as it got, and prices slid off down to $42 by June of this year. We have now the largest net long position on speculators ever in the WTI contract, so positioning risk there. I think the magic number is probably $55. I am currently short. I just like the way the chart sets up. I've been waiting to short crude for a couple of months, and finally, I got my moment. I could go into a lot more detail, but we've got American production is now at all-time record highs. We're 9.7 million barrels a day. I think I'm just inclined to believe the bearish supply, demand, inventory story, but that's me. And then I look for positioning in the market. This is a classic case of waiting, having a view on a market, and then waiting for the market to confirm that it's turning. And I think particularly now that it looks like it's turned from the highs around 59, we're now at about 56. If we take out $55, I think there could be a lot of selling coming into this market.
Is gold going to continue to churn in one spot like it has for the longest time, or is it going to make a rapid move, either up or down?
Well, gold has, I was making a comment the other day. I think gold traded in a $30 range for about 6 weeks. Now, give or take a buck. But call it roughly $1,270 to $1,300. The trouble with gold, I guess, if you want to be bullish, is real interest rates have taken a jump to the upside, and the U.S. dollar seems to be catching a little bit. We've had the gold market fall below that range by a couple of bucks down to $1,265 or so. It's a breakdown to a 4-month low on spot gold. I think the gold market looks in trouble here from a technical point of view. I mean, there's lots of, the usual geopolitical risk kind of reasons why you might want to own some gold, and certainly if the stock market was to take a hit, maybe gold catches a bid. However, I think part of that would be that if the stock market takes a hit, then gold gets sold to meet margin calls and so on. So, I don't have a position in gold here. I think the market looks vulnerable to a break.
Copper is well off its, high for the year. Is that going to continue?
You can't talk about copper without talking about China, and I'm always worried that, any information that I have about China, I got to go, is it true? You just don't know. I mean, I think China takes about half of global production. I mean, it's that important. Then they have their ebbs and flows in terms of demand. We've just had a major party congress in China here a month or two back, and Xi has consolidated his hold on power. Maybe they want to slow the economy down. I don't know. That's what I call that fundamental news, and it's hard to figure with China because you just wonder whether or not what you're reading is based on fact. So look at the chart. I mean, we hit 3-year highs here, about $3.25 in October. And I think one of the stories is the demand for copper for electronic vehicles and, alternative energy sources and so on. Great story. But we had a brutal bear market in copper from 2011 down to January of 16 when we made the low. Rallied from about $2 then all the way, where were we? Yeah, we got down to about $2 and then rallied up to $3.25, so a 60% rally. I think if I look at the charts only, I mean, again, like gold, it looks vulnerable. So I don't have a position. Kind of wish I did, and if I had a position on, I'd be negative.
Well, I know a few years ago, some people in China were stockpiling copper, treating it like it was gold, and they really got burned. Do you think that is going to happen or could happen this time around as well?
I think what is the play there is that copper was hypothecated. In other words, if you had some physical copper, you could borrow money against it, and why stop at just borrowing money on it once? I think people were borrowing money on it several times over. In other words, putting it up as collateral with a variety of different lenders. It's just a weird and wacky financial system. China is hugely important to the copper market, and I just can't pretend that I know really what's going on there. So if I'm going to trade copper, I really have to be looking at the charts, and the charts look negative.
Victor, thank you so much for chatting with us.
Jim, it's always a pleasure. I mean, we just got going. Thanks, Jim.
My guest has been Victor Adair, co-founder of the Polar Futures Group. He's Senior Vice President and Derivatives Portfolio Manager at PI Financial in Vancouver. His website, polarfuturesgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Questions for our guests or the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.